Organizing your finances can be easier than it seems. If managing your small business finances has been a headache, it's time to change that. Because even if you're not an expert, there are simple and practical ways to get your business's finances in order. So, learn how to organize your money and make decisions that drive the growth of your business sustainably and profitably. Lack of financial organization is one of the main reasons for small business failure. Therefore, establishing and organizing efficient financial management is essential to ensure the sustainability and growth of the business. With this in mind, we will now show you the 13 steps to organizing the finances of a small company or business, which will certainly help you a lot, regardless of your level of knowledge or experience with this subject. 1. Separate personal finances from the company. The company's cash flow is one thing, the entrepreneur's wallet is another. This needs to be very clear, and it needs to be done. The financial health of your business cannot be mixed with your account. Separating them will give you greater control over financial management, both business and personal. 2. Work on your company's financial planning. Financial planning consists of projecting revenues and expenses for a given period. In addition, it analyzes the projected scenarios and establishes goals based on this information. In other words, it will indicate the guidelines for the business to be profitable through a set of actions, tools, and controls that seek to understand, organize, and manage the financial resources of a company in the short, medium, and long term. In other words, the main objective of corporate financial planning is to ensure that your company has enough cash in hand to have a healthy life, be able to take advantage of opportunities, or resolve possible emergencies, and thus to grow constantly. 3. Understand the current financial situation. A mandatory step is to clearly understand the current financial situation of your business. This involves a detailed analysis of revenues, expenses, assets, and liabilities. Here, we suggest carefully analyzing some pillars, such as cash flow analysis. Cash flow is the control of the inflows and outflows of money from the company's cash register. In other words, what you receive and what you pay for in your business. For good cash flow control, it is necessary to ensure very detailed records of income and expenses with great attention and organization, and to monitor it constantly. That is why identifying fixed and variable costs, in addition to differentiating your costs and expenses, is very important. Because this is what cash flow will monitor to help understand whether the company's financial health is good or not. Here, it is essential to understand when the money from a given sale comes in, if a payment is made on credit or in installments. And the same goes for the company's purchases, which can also be paid in installments. Balance sheet. The balance sheet is an accounting document that shows what a company owns, assets, what it owes, liabilities, and what belongs to the owner's equity at a given time. It is essential to understand the financial health of a company. Therefore, develop a balance sheet to understand the financial position of the company at a given time. This includes assets such as cash, inventory, and equipment, and liabilities, debts, accounts payable, as we explain now. Profitability analysis. Analyze the profitability of each product or service offered by your company. This way, identify which are the most profitable and which may need adjustments to increase their contribution to cash flow. Detailed debts. List all of the company's debts, including the total amount, interest rate, payment terms, and creditors. This will help prioritize which debts need to be addressed first, as well as understanding the real size of the debts that need to be worked on. 4. Record and categorize all financial transactions. Regardless of the amount spent or received, record all movements in the cash flow. This way, you will be able to organize your finances properly, have access to each transaction whenever necessary, and avoid wasting money. Here, it is essential to separate each movement into distinct categories, which will make it easier to identify the main types of expenses and income. And to simplify these records, it is recommended to invest in an efficient financial management platform. In fact, there are currently several management systems that greatly help in business management, such as ERPs, which are management systems that allow easy, integrated, and reliable access to a company's data. 5. Define objectives and goals. After analyzing the current context, be very clear about where you want to go. Set objectives and goals according to your company. Be extremely sincere and use coherence as a basis. For example, what revenue do you intend to achieve? What are the cost and expense limits? How much the company is willing to make new operational investments? What is the expected profit at the end of the period being planned? Finally, define all the points according to your business. This step is very important because it will guide the financial and strategic matters of your business. 6. Implement a strict budget. Develop a detailed budget that reflects your company's financial goals. Then, closely monitor actual performance against the budget and make adjustments as necessary to ensure adequate control of spending. Based on the goals and objectives outlined so far, clarify what your annual budget will be for each area or need. Consider paying bills and salaries, investing in new equipment, structure and processes, sales forecast, financial reserves, etc. Plan this monthly, have an overview of the year, and define what your annual budget will be. This is very important so that you have a clear idea of the company's financial health throughout the year. This way, your business will have a complete plan of how much it needs to earn, what the cost and expense limits it needs to respect, and what investments it needs to make. And this way, you will be able to monitor the results of your business to know if you are on the right track or if you need to make some adjustments. 7. Control costs and expenses. Keep a close eye on all of your business's costs and expenses, all of them. This way, you will truly understand what your company is spending, as well as identify what can be cut. But always consider not to lose the quality of your business's delivery. And out of curiosity, do you always separate your costs and expenses? Tell us about it here. 8. Design alternative scenarios. Often, things don't happen as expected. Therefore, it is very important to outline alternative scenarios to what you projected as ideal. Simulate a more pessimistic scenario and a more optimistic one. This way, you will be able to prepare yourself while your business is still progressing and make possible adjustments when necessary. Because the faster, more planned, and informed the decision is, the better for the company. 9. Working capital. Having working capital represents a reserve of resources that will be used to meet the company's financial needs over time, such as investing in opportunities or even paying bills or debts, or even resolving any emergencies in the company. It is very important to have a little more financial peace of mind. 10. Accounting. In short, accounting is the science that studies, records, and interprets the financial information of companies and the activities that affect their economic management. In practice, it assists in the process of managing companies, all through information and reports that guide managers to follow certain paths to achieve greater profitability and business success, all in accordance with the law. In part, it is about the inflow and outflow of money. However, this simple movement influences several other issues and fronts. Keep in mind that all cash inflows and outflows from your business need to be recorded, processed, and forwarded to the government. This influences the amount of taxes, fees, and obligations that must be complied with according to the legislation. And this is precisely what accounting monitors and manages. This role is performed by accountants or companies specialized in this subject. 11. Establish financial indicators. Financial indicators are metrics that help assess the company's financial health and make informed decisions. For example, profitability measures how much revenue is converted into profit. Contribution margin shows how much each product or service contributes to paying fixed costs and generating profit. Break-even point indicates the minimum level of sales needed to cover all costs. Inventory control evaluates efficiency in inventory management, something crucial for businesses that deal with products, among many other very important indicators that help a lot to understand and organize your business finances. 12th, monitor and improve closely. Monitor each stage of the planning process, as well as the results obtained. Analyze whether the objectives are being achieved and whether the goals are being achieved as planned. Review each part of the management whenever possible. This will help you identify areas for attention. Also, make adjustments when necessary. This will greatly help you keep your annual planning solid, organized, assertive, and infallible. 13. Invest in financial education. As an entrepreneur, it is essential to understand the fundamentals of financial management to make better decisions in your own business. So, read books and articles on the subject, take courses, seek out consultants, etc. But even if it seems challenging at first, adopting all these practices that we show here can transform the management of your business. Keep in mind that professionals who master their finances are well prepared to face crises, seize opportunities, and achieve success. So, start implementing the tips in this guide and see how your company's financial health will improve. After all, businesses that are well managed financially have a much greater chance of thriving in a competitive market.
We hope you enjoyed it, and if you want to know more about how to set up and manage your own business, visit our YouTube channel where we have several videos about this subject, and if you liked it, share this video with your friends and family to help them too. Thanks and see you next time.